An American multinational investment firm with headquarters in New York City is called BlackRock Incorporated. BlackRock, the largest asset manager in the world as of January 2022, was established in 1988 and initially served as a risk management and institutional fixed income asset manager. BlackRock has clients in 100 countries and 70 offices spread across 30 different nations. BlackRock is regarded as one of the big three index fund managers that rule America, together with Vanguard and State Street. Welcome to the channel, subscribe, and get ready to dive deep into BlackRock Incorporated. For institutional and retail clients worldwide, BlackRock Incorporated offers investment management, risk management, and consulting services. Because to its platform, the business may provide active alpha investments alongside index or beta products and risk management to create specialized client solutions. Its product line includes single and multi-asset class portfolios that invest in money market instruments, fixed income, equities, and alternative investments. The company makes its products available both directly and through intermediaries in a range of vehicles, including open-end and closed-end mutual funds, iShares, exchange-traded funds, and other exchange-traded products, collective investment funds, and separate accounts. Moreover, the business provides its BlackRock Solutions risk management, consulting, and investment platforms primarily to institutional clients. BlackRock's history over the past 25 years, starting with its founding in 1988, is about a dedication to putting clients first, innovative thinking, a passion for performance, and an extraordinary level of teamwork. BlackRock was founded in 1988 by 8 individuals who met in a single room and had the vision to create a superior asset management company. They had a similar commitment to putting the needs and interests of their clients first, as well as a passion for risk management and fact-based, data-driven investment. The Blackstone Group founded the company, which at first had a fixed income main concentration. The company was able to create significant early advances in relation to closed-end funds, trusts, defined contribution plans, and more by paying attention to clients and comprehending their unmet needs. One of these was the Blackstone Team Trust, which raised $1 billion and launched the company on a course for consistent development and achievement. The company changed its name to BlackRock in 1992. BlackRock managed $17 billion in assets by the end of that year, compared to $53 billion at the end of 1994. Now known as BlackRock, the company joined PNC Financial, a bank holding company, in 1995 and quickly started managing open-end mutual funds, including equity funds. BlackRock's affiliation with PNC offered it access to the bank's extensive distribution network and provided options for diversification through mergers and alliances with PNC affiliates that were experts in equities and other types of investments. The business created a One BlackRock idea as it diversified. It would later become one of its guiding principles. BlackRock advocated on a coordinated platform over the autonomous business divisions that were common in many businesses. BlackRock established a client-centric business strategy, allowing clients to take advantage of all of the firm's resources and products by managing fixed income, equity, and other businesses jointly. BlackRock went public in 1999 with a significant employee ownership. The company managed $165 billion in assets at the end of that year, and by the end of 2004, that amount had increased to $342 billion. BlackRock had successful fixed income, equities, and consulting businesses by the year 2005. As a result of a series of transformational mergers, the business now possessed additional key investment competencies. With greater options in equity, multi-asset products, and alternatives, these acquisitions strengthened BlackRock's product and service mix and significantly increased the company's scale and global reach. The largest merger occurred when BlackRock purchased Barclays Global Investors in 2009, expanding the company's capabilities in active, index, and exchange-traded funds through iShares. BlackRock was a leader in multi-asset solutions at this time by integrating teams that offered a variety of client services into one unit and combining asset allocation with a variety of product solutions that crossed asset classes. The company rose to the top of the industry. BlackRock Solutions and earlier work helped it launch Financial Markets Advisory, which started offering unbiased guidance FMA. Governments, financial institutions, and other participants in the public and private capital markets all over the world can get assurance from the FMA team in understanding their investments and risk. BlackRock is currently the top asset manager in the world, servicing millions of people from all walks of life, as well as many of the biggest corporations, foundations, pension funds, and public institutions. With more than $10 trillion in assets under management (AUM) as of December 31, 2021, BlackRock Incorporated may be the largest investment management firm in the world. BlackRock, a significant publicly traded business with a market cap of around $112.3 billion, offers investment and technology services to institutional and individual clients globally. The company provides a range of funds and portfolios that invest in things like fixed income, money market instruments, and equity. Customers look to BlackRock for access to exchange-traded funds, mutual funds, and investments with a focus on goals connected to retirement income and college savings. The largest global provider of ETFs, the iShares group of ETFs, is owned by BlackRock. The majority of BlackRock's income comes from client-paid administrative and investment advising fees. The Vanguard Group, State Street Corp, and T. Rowe Price Group Incorporated are a few of BlackRock's main rivals. Financials of BlackRock. BlackRock released its financial results for the fourth quarter (Q4) of its fiscal year, which ended on March 18th in mid-January. The company's net income was $1.6 billion, up 6.1% over the same period last year. At $5.1 billion, revenue increased 14% year-over-year. The company's AUM reached a record high of $10 trillion, up 15.4% year-over-year. Throughout the quarter, BlackRock generated $212 billion in net inflows. With long-term net flows of $139 billion, the Americas region outperformed all other regions. More long-term net inflows of $104 billion were produced by the company's ETF offerings than by institutional and retail investors put together. BlackRock does not disclose the revenue for its several business segments because it operates as a single business division. Yet it does categorize its income into the following groups: investment advisory, administration fees, and securities lending revenue, investment advisory performance fees, technology services revenue, distribution fees, and advisory and other revenue. Investment, advisory, administration fees, and securities lending revenue. The majority of BlackRock's income comes from investment advice and administration fees, which are typically based on predetermined percentages of AUM and are assessed over time. Fees for the company's equity, fixed income, multi-asset alternative, and cash management services are included in this part of BlackRock's operations. This segment contributed $4 billion in revenue, or nearly 78% of total revenue, in the fourth quarter of FY 2021. In comparison to the prior quarter, this increased by 16.9%. Investment advisory performance fees. Performance fees, as opposed to administrative fees, are charged to specific BlackRock account types when performance surpasses a predetermined level. In Q4 FY 2021, performance fees contributed $329 million in revenue, or nearly 6% of all revenue. This was lower than the same quarter last year by 21.5%. Technology services revenue. To different insurance company, bank, pension fund, and asset manager clients, BlackRock offers a variety of investment management technology systems, risk management services, wealth management, and digital distribution tools. For Q4 FY 2021, technology services generated $339 million in revenue, or around 7% of the total. Its number increased by 11.1%. Distribution fees. BlackRock charges fees for support services relating to investment portfolios, as well as for the distribution and service of its many products. This category generated $411 million in revenue in Q4 FY 2021, or roughly 8% of the total revenue for the quarter. When compared to Q4 FY 2020, this was up 30.9%. Advisory and other revenue. Moreover, BlackRock separates off a category of revenue for its advice services to governments, regulators, and international financial institutions. These costs have a fixed rate. This segment generated $59 million in revenue in Q4 FY 2021, or around 1% of the overall revenue. When compared to the same quarter last year, this was up 25.5%. In light of Russia's recent invasion of Ukraine, BlackRock said on March 3, 2022, that it had stopped purchasing any Russian securities in both its active and index funds. Less than 0.01% of the assets held by the company's clients are Russian securities. Investors are given a peek into BlackRock's openness and its dedication to diversity, inclusivity, and social responsibility as part of its endeavor to raise investor awareness of the value of diversity in the workplace. A multinational corporation that just made a name for itself in asset management and is currently the largest stockholder in the world. It is the name that has overshadowed many companies around the globe. This indeed is a company perhaps more powerful than many governments in the world. Thank you for watching and follow for more.